Namaskar and hello, welcome back to my channel. This is Neeraj here once again from my channel, my financial market analysis twist by 𝗦𝗧𝗢𝗖𝗞. Welcome back. And in today's video, I would just like to give some updates regarding what's happened in the 1 week and in the wake of USA Fed deciding to increase in the future, the prospect of interest rate hikes and its impact on the market in general. So before starting, I would just like to thank you all the subscribers very much. I'm really thankful to you, and thank you for watching. And if you please put a like on this video, and if you have not yet subscribed, please subscribe to my channel. And I also regarding the stock specific ideas, I have a different format. It's on a nominal charge basis. I have already come out with the 2 premium videos for those 2 specific stock ideas. So all my details are in the description box down below, so anybody can contact me regarding that paid service. So as you know that yesterday in 2 days before this, USA Fed came out, announced because of this heightened inflation, everywhere this commodity prices and everything is gone up through the roof. And with that fear of inflation and also the job creation data in USA being robust, they have kind of contained in this, that by the end of the 2023 they will keep that interest rate range would be increased to 0.6% from the current 0.1%. So basically they have factored in the future 2 interest rate hikes. So what has happened is that as you know that we all were talking about in my numerous videos, I have told about that how this soft interest rate regime or the zero interest rate regime keeps on the commodity continuously on the high side. And as and when that USA Fed decides to do something else, increase the Fed rate, that will impact the commodity prices. And also what has happened is that continuously regarding the steel and iron ore, as I have been very much vocal in advance in 2 months before only, I had told that this iron ore and steel prices have topped out. So you will see that stocks also remaining at the same price. So your iron ore price has topped out at $225 per ton around CIF China prices. And steel prices are also, because if the iron ore prices is not is topped out, I don't think so that you don't see the steel prices also going any more, because there is no reason for it to go. And also contrary to everyone's expectation, because this iron ore were on the hot fire because of also the assumption that Chinese government is screwing the nut bolts on the pollution and on the industrial pollution, and as a result they have ordered some kind of a closure of this old steel mills or revamp of the steel mills, and as a result some of the production may go out of the market. And that is why production going out and supply reducing, you will see the farmer steel prices. But as that recent data has come just recently, that in January to May 5 months period of this year 2021, the Chinese steel production has actually gone up by 13.9%, around 14% you can say, year on year basis compared to the last year. So all this hopes of that the production will be curtailed because of this, I think that is also not going to be there. And another third factor which is very important for this the steel or iron or generally this prices, metal prices, is that this now with this in the tropical part of the world, or what you can say the India particularly, and in the South Asia and generally in the African side of this world, this is a summer rainy season. Monsoon is already officially, monsoon has started. Okay, so what happens is that rainy season starting, so your construction activity, any case in India last 2-3 months were locked down, and partial lockdown. Because of that also the activities, much business activity was not there. And with that now, even if it is partially opened up, but with the onset of the monsoon and the rains heralding, you will see the construction activity slowing down. See, in all Asia and in generally even in China and in most of these what do you call this tropical places. So because of that, the demand for the metals or the steel may cool down for the timing. It's a seasonal effect. Every year you will see that up to September, October, from June, July to September, October, till the time the monsoon rains are there in India. And this is here also, it's expected to be the normal monsoon in India. So you will see that infrastructure or the construction activities also getting affected. And because of that, the demand for the steel also may, there may be it's a seasonal effect. So there won't be much demand as of now. And that will also weigh on the prices of the steel and iron ore. And you will see that that is the reason that 1-2 months before only I had told that steel stocks stopped out because of so many numerous reasons. So you may not see this, this like kind of stocks have topped out. For the time being, this steel stocks, one can, book profits or whatever it is, that it's topped out as if, in my opinion. And what it looks good is in all this, it's a contrasting theory, is which I still see that there is a 10% around upside in the crude oil, and you will see that crude oil over a period of time this Brent crude may settle around $80 per barrel. There are some few reasons for this. My relative modest positive or the bullishness in crude oil as compared to this metal as of now I'm talking about for the medium term. I'm not talking about long term. It's a short to medium term, is because if you look at the US inventory data, which every week comes since last 1 month, means continuously 4 weeks of data, if you see, it is showing a continuous decline in the US inventory of this crude oil. Okay, it's continuously declining. There's 7.3 million barrels, then 6 million barrels, and like that it's a continuous decline. So that is also giving a lot of uptick to this crude oil. And apart from that, there is a very much a discipline among the OPEC oil producers, and they have understood that their remaining discipline together also keeps the oil steady and strong. So what we understand from this general conversation in the OPEC chaturity is that they will also continue to keep this oil balanced production in July. In the month of July also, there will be a gradual increase. It will not, and even if everything market opens up, they will not be rushing to increase the supply immediately. There will be a moderate to gradual increase in the oil supply. And this and particularly with the India opening up now again after this lockdown, you will see the demand for the crude or the oil from India also picking up gradually because of the resumption of the business activities. And in generally also Europe has also opened up after 1 year or 2 years of lockdown. You can say Europe was sitting in continuously lockdown, and most of these travel places has also kind of opened up. France has opened up, has started without mask regime from the 10th of July. So you will see that's a resumption of some kind of all these activities, and in all these countries will keep this oil on a firmer and steadier foot, even though the interest rate hike continues to weigh on it. But I see in the near term the 10% upside to the oil, and one can play according to that into the oil stocks, oil and gas stocks. So to conclude this, I see that crude may touch around 80 barrels very soon in the near to medium term, and it should continue to hold at that level. I don't see the crude oil coming down any further, any much more from this current levels, because of this discipline and because of this continuously decline in the USA oil inventory and discipline among the OPEC producers. That's it. I just wanted to share some update on this. If any further updates will come, I will come out with this further updates, or till that time I would just like to say thank you very much for watching, and ciao from Neeraj from Moscow. Thanks a lot. See you once again next week with some new ideas.